Double tops are probably one of the most popular and frequently seen chart patterns. I think you'll agree with me there. In my experience, there is one particular variation of this double top which has always fascinated me. It's called the Adam and Eve double top, especially when I see this pattern on the monthly time frame. Hello, everyone. My name is Abhijit Paul, and I've been associated with the Indian equity markets for the last 21 years. And the reason I'm creating this video for you is because at this juncture, July 2026, there is an important chart on the monthly time frame. It's an important index on the monthly time frame of the Indian equity markets, which has been creating this Adam and Eve double top for quite some time, for multiple months, and it will be very, very interesting to see what leads to the final outcome. So come join me. In this video, I will walk you through the anatomy of the Adam and Eve double top. In this video, I'll be specially focusing on the monthly time frame and what kind of outcomes can we expect if a successful Adam and Eve double top breaks down. So join me. Let's talk about this fascinating double top pattern. Now, what we have done is I have taken two screenshots of this particular pattern. I will walk you through this pattern step by step. But before that, I think it makes sense that I, draw it out. Let's open the whiteboard, as you can see. And quick revision of what is a double top. Double top should come after an uptrend. It should go to a certain level and come down, thereby creating a certain level of, let's say, resistance. And then the prices bounce back and comes very close to that level, more or less. Cannot expect to be exactly the same point, but more or less aspas. And then from there, it creates another short term fall, which kind of confirms that the previous resistance, which was formed earlier, has been a valid resistance. Essentially, there's supply at the current level, which leads to this short term correction. The last time when it came down, it made a bottom here, which means very common sense, very obvious that this bottom, if this low is in the future, it's broken, then that will be termed as a breakdown, and then the market can come down. This is a typical double top. As it falls, volumes generally shift on the falling side, may or may not always. And from a simple, target point of view, simple calculation is calculate the vertical distance of the double top and subtract that amount, and you will more or less find a conservative target on the downside. Flip it upside down, you get the double bottom. This video, I want to focus on the double top and mainly on the monthly time frame. I'm doing this mainly on the monthly time frame because when they form on the monthly charts, which is a larger time frame, it leads to huge trend reversals, either from bottom to top if it's a double bottom, or top to bottom if it's a double top. So I'll focus on the monthly time frame, and I will focus on the Adam and Eve double top. Adam and Eve double top, I'm not too sure, do let me know if you're aware of it, is a very unique pattern. This combination, I have shared with this little earlier, but this combination is forming right now as I create this video for you on a very important index of the Indian equity markets. Do let me know if you're already aware of it in the comments, which is that index. And if you can share some, screenshots. Also, it will be very interesting to see in the future what happens, what is the final outcome. So, how does an Adam and Eve double top look like? Number one, it should always come after an uptrend. Number two, just like the double top, it should go up and create another top. But it's the second top which is interesting. The second top essentially is it takes a lot of time. In very short, I'll say it takes a lot of time. It's a roundish in nature. On the other hand, the first top is very sharp in nature, and that's why the name Adam and Eve. Adam and Eve. So you're looking at a very sharp reversal and a very roundish reversal. This is an Adam and Eve double top. And in terms of a downtrend, when the market is falling, essentially you'll be looking at a sharp reversal and a down more or less comes down to the same level. That's an Adam Eve double bottom. The rest of the logic, volume shifting towards the sell side, waiting for the breakdown point, expecting the vertical distance as the target. The rest of everything remains more or less the same. Personally, I have found them to be pretty reliable pattern. So with that, I have taken two screenshots. This is of ITC on the monthly. Now, hold on. This pattern you can find on the intraday charts, on the daily, weekly, monthly, all time frames. I have purposely kept these two examples from the monthly. But my experience tells me that if you focus on the weekly, the frequency of these patterns will be much more. So allow me to share two such examples. I'm looking at the chart of ITC on the monthly time frame, and as I was doing this homework to find on the monthly time frame, I had to go back quite a bit. This is around 2019, 2020, so just before the COVID correction. You can clearly see with me over here a sharp move and then a kind of a roundish top. This was a breakdown point, and that's exactly the COVID correction. Do not be too picky about it. It has to be exactly the same level. Over here, I can see I'm using the monthly, I'm using the Heikin-Ashi, and this seems like some kind of a spike move. It's not that the price is really, really traded all the way up there. And so I am considering more of the bodies of the Heikin-Ashi and kind of letting go of the shadows, because the shadows are highs and lows. Markets does not spend a lot of time at that low and a high. It's just a one trade and it kind of bounces back or slips sharply. So I'm focusing more on the body because that is where the majority of trades have taken place. So this is one such example. And if you take the vertical distance over here and subtract it, I like to use the word conservative target, because most of the time this level generally always comes. That's ITC one example. The other one is that of HCLTech. That also led to a pretty sharp correction, and this was way back in the 2008 correction. As you can see over here, this was an uptrend which led to a sharp move, and then again a staggered time pass, taking all its time. See, the top of the eve is very frustrating. This is where the chart goes range bound. You have demand, you have bullishness. The chart probably gives you breakouts which fail. It's showing strength and it's also showing weakness. And then finally, it leads to a fall. Do these patterns fail? Yes, all patterns have a certain degree of failure in them, but I have found them to be pretty useful, pretty reliable. They do not form all the time. A double top or a double bottom, you'll find, is relatively much more frequent and easier to form. And Adam and Eve takes time primarily because of the Eve section, right? So this is that of the HCL text monthly chart. And even now, if you can quickly do that vertical distance, it's not a problem at all. Now, with these thoughts and with this Adam and Eve double top on the monthly time frame, if you already have it, if you already are aware of it, if you know it, great. But if you don't, uh, please take a look at few of the most important indices on the Indian equity markets. And one of them has been forming for quite a few months now, a fantastic looking Adam and Eve top on the monthly chart. And only time and price will prove us whether this one leads to a failure or it leads to a significant correction, which means that in the next maybe 2, 3, 4, 5, 6 months, who knows, in the next few months, I'm sure we should revisit this concept and there should be a part two of this particular video. Till then, take care of yourselves, trade well.